Hey folks, Dan Frio here, the rate update. Today is June 1st. Happy June, happy Tuesday, which feels like a Monday. Got some good news on rates, kind of, but it's got bad news for a lot of homeowners and a lot of renters come June. So don't go away. We'll be right back. Okay, I hate to start the video on a down note, but headlines. Let's get to the rates real quick and let's get to the economic news for today because I don't want to waste your valuable time. So let's get on to what the news says right now. It says millions. This is right on CNBC. I just pulled it up a second ago. It's June 1st. Millions of Americans could face eviction as housing protections expire in June. What I've been trying to explain to everybody is all these programs, part of the CARE Act, that help renters, help home buyers, help even students. But the biggest thing is your housing, okay? There's what's called a forbearance. So if you're in a forbearance agreement, I've been pleading to everybody for the last like 6-8 months, is get an exit strategy. Even if you call us and we say, you know what they're offering you is the best plan, at least you got backed up by a mortgage advisor. Basically, I don't consider ourselves loan officers. We're mortgage advisors for you guys. Why? I'm going to post a video later this week that shows just you guys on if you qualify for a conventional loan and your loan officer puts you into an FHA loan, how it costs this particular borrower over $56,000 extra because they were placed in the wrong program. So that's what we do. We educate you guys on what, where, why, and how. And we explain why we're doing what we're doing, how we're going to do it, which direction we're going to say. And the biggest thing is we explain to you why we're doing it. Okay, so that's it for that. So I want to go over, if you're in a forbearance, please reach out to us. I'll give you all of our information at the end. Email me, go call us, call the 800 number, schedule an appointment. We need to work with you guys in regards to that. But that being said, let's get on to some more news. You guys are here to watch for interest rates, and I try to post every day a little segment to educate you guys on a little thing, but the main purpose of the video is on interest rates. So right now we got a big, the headlines on Mortgage News Daily, and I'll post this out here in about 10-15 minutes after I do the video, is bonds a bit nervous as big data week begins. So here's what I do and why. We follow this chart right here and this number right here. And what this is the mortgage-backed securities market. And this number right here represents the price of a mortgage-backed security. This is a bond that trades on Wall Street. And I know you guys that follow me every day, you get sick and tired of hearing that, but we have a bunch of new followers every day. So this is the biggest piece of the puzzle when it comes to your mortgage rate. So that's why we follow this. What affects this? Well, economic news, supply, demand. What creates the supply and demand is, well, the demand is basically economic news, and that's right there. And then we're going to go over what happened during the day. So we want to take a glimpse back and say, okay, what happened today? And then let's figure out why, and then let's look at the week and then the next week and maybe the next month or so to come. So this is what's happening with the chart over the last quarter. All right, so I'm going to get rid of a couple of different things. So this tracks the mortgage-backed security price. Okay, the biggest data point I can give you on here is as the price goes up, rates come down. So remember that. Don't forget it. Price here, this chart goes up, mortgage rates are coming down. When this is going down, mortgage rates are going up. Okay, so remember that there. So we love the green and we love the charts going up. Okay, so over the about a week or two ago, we saw a nice little rally up. And then all of a sudden, inflation became the buzzword again, which we had back in this time period, and caused a little deflation in these numbers. So it caused concern and fear, and then people started reacting to that. And again, they started pushing down the price, and the yields started to go up. All right, so that's one of the biggest things we follow, and we also follow the 10-year Treasury because this is a competitive investment versus mortgage-backed securities. So let me frame that. If you have $1,000 or $10,000 or $1 billion to invest in bonds, what are you going to invest in? You're going to invest in mortgage-backed securities or in treasuries? Okay, it depends on your scenario and the yield that you want to get. So as the yield of the Treasury keeps going up, it competes against the mortgage-backed securities market. So that's one of the biggest components that affect this number. The other component that affects the number is a lot of the economic data coming in. And we have a big week, as this just mentioned. We have a big data week that could make bonds specifically mortgage-backed securities, a little bit contentious, on what's happening. So let me frame it this way: when the economy is I'll say bad, or nervous, or speculative, especially in the stock market, people are going to get out of. Hold on, my light's a little bit hot. They're going to get out of stocks and other riskier investments and put it into a more secure investment. That secure investments are bonds, because you always know you're going to make yield on your bond. Okay, so that's basically what we're watching here. So if there's uncertainties in the market that we're going to try to track to see, is there some news coming out during this week that could really play havoc on the markets? So when we go through this calendar, what we see is there is a lot of economic news coming out. Like today, construction spending came out, and those numbers were bad. Last month we had a 1% gain. We thought we were going to be at a 0.6. We came in at a third less than that. We came in at a 0.2. Why? Well, a lot of construction is being pulled back because the prices of raw materials are that bad. Okay, so tomorrow, let's start looking at some of the things that could or will affect the markets. We got payroll coming out tomorrow. Is there going to be a lot of people added to payroll, or are the unemployment numbers going to go higher? On Thursday, we have more jobs, productivity, union cost, or unit labor cost. That's Thursday. Again, it's a lot of job and productivity. So how productive is the economy doing? And then you come out on Friday at 6 a.m., Federal Chairman Powell, he runs the Federal Reserve. He's going to come out and talk. I always get nervous because everybody takes a microscope to I kid you not, every word the guy says. Okay, so then we get back to here, earnings, hourly earnings, average weekly hours worked, the unemployment rate, non-farm payroll, factory orders. So again, it's engulfed with payroll numbers and employment, and then manufacturing numbers. Okay, so that's what you have there. So that's why I'm a little nervous of this week, what these numbers are going to bring. But right now we see we're in a nice, I like the green. Okay, so let's dissect in this a little bit more. These numbers right here are called Fibonacci levels. These are basically resistance lines when things trade. So you can do this with the bond prices, stock prices, the weather, anything you want to do. Your time, how fast you ran that mile when you exercised this morning, and you chart it and you figure out how you're doing. Okay, so these are called Fibonacci levels. So if you look at these lines right here, this should create a ceiling and a floor. So you can notice over the last month or two, it's been really holding steady. It's everything's bouncing in between there. Other than a little hiccup here and a little hiccup here, we stayed in these lines. Okay, so then there's more lines in there: the 100-day, 50-day, and 25-day moving averages. So these are lines represented in here. Okay, so the one line here is the 25-day moving average right here, and then this line right here is the 50-day moving average right here. Okay, so we're trading right between there. I'm comfortable with where we're at right now. There's not much volatility in the market. You'll see a little bit of volatility this morning, but it came all the way back to almost zero, so that's good. We held off. So I don't really see anything majorly changing here. The Federal Reserve, their stance is they're going to stay steady on rates and everything else, so nothing should hiccup the system there. You go to the economic calendar, these numbers, unless they really come out with a really kind of blindsiding us on some of the numbers, we should stay steady there. Well, let's look what happened during the day. This is where, when I came in this morning, I'm like, man, what is happening? Well, we started out the day and we were way down. Okay, and then we rallied up out of the gate. We rallied, and we almost ended the day even. Okay, so this is how far in the hole we started, and then we rallied throughout the whole day. We had a little give back right here. This red candlestick means there's more sellers than buyers, but we had a nice rally. We were down almost 18 points this morning, and we ended the day basically almost flat. I'll take it. I like that trend. Okay, so the next thing we do is let's look at what's going on with mortgage rates. This is a mortgage rates compiled by Black Knight. They're a big economic company that produces a bunch of data for us and the stock market and a whole bunch of other companies. And they survey mortgage lenders all over the country, and they give us what their average rates are throughout the whole country. So right now, what we post on here, this is the easiest way to do. There's pages and pages and pages of this, but I would have you here all day long. And I know you're here to learn something, look at the economic calendar and figure out where the rates are, and then you're going to go click to the next video. which good for you. But we have the 30-year conforming, jumbo, FHA, and VA. Here's where the rates are. Okay, these are not my rates. These are the average throughout the whole country. So if your rate's a lot higher than this, there might be a reason for it. Your credit scores might be really low. Your loan to value, which is your loan amount divided by your home's value, might be really high or so forth. Again, this is the average. So there's going to be some that are higher. There's going to be some that are lower. If you have a lot lower than this or a lot higher than this, that's where I want you to be cautious. Okay, so the other data I give you is where we were a day ago, 7 days ago, and 4 weeks ago. Delta means change. So a 1 day change, 7 day change, 4 weeks change. So unless the rates really start to change by 0.1 or 0.2 more, you're really not going to see a change in rates. Here's what I mean. A 1 day change is 5 basis points. 5 basis points in numerical numbers is 0.05. That equals 5 basis points. Okay, so until we get to 10 or 12 or 15 basis points, you're not really going to see a change in rates. So in the past day, they're up about 5 basis points. Over the last week, there's really no change. And over the last month, no change. So we like the consistency. We like the steadiness in all this right now. So that's where rates are right now. How do you get your specific rate for your situation? Because what comes into play with mortgage rates is your credit score. What kind of house do you have? How much equity do you have in your house? And how much do you have to tap into that? We call that loan to value. What the loan to value is, this is basically our keyword of the day. Loan to value is the loan amount divided by the value of the home. So if your value of your home is 100, okay, let's say your loan is 50. So 50 divided by 100 is 50%. So your loan to value would be 50%. As you go higher and higher and higher in that loan to value, it's riskier for us because we're giving you more equity out of your home. So there's that much less equity that we have as a cushion. The rate gets higher because the risk is higher, the rate's higher. Your credit score is lower, higher risk for us. We're the one giving you the money. So the higher the rate. Okay, just those are examples of areas where they differ. So how do you reach out to us and get your own customized rate? I'll give you that information here in a second. But if you're looking to build, buy, or refinance, please reach out to us. If we're not your first choice, at least let's look at what you're getting quoted. I ask you to email me your loan estimate. So if you're working with a lender right now, we have to physically give you what we call a loan estimate within 3 days of pulling your credit. It's a 3-page document, and it goes over what your rate is, your loan amount, the house value, the term of the loan, and all your fees. Okay, so that's what we want to look at. I did a voting thing or a poll on YouTube, and I said, guys, would you be willing to pay $5,000 in points to save $200 a month? And it's crazy. I didn't think it would come back this way, but 2/3 of the people said, yeah, because after 2 years, I'm going to save that money. I didn't think that, and that was a surprise to me. So what I'm going to start doing is starting to ask you guys, do you want to pay points? And if you first say no, that's kind of how I was. But let's pay attention to it and see where your break-even point is. Because if your break-even point is 2 years, 3 years, you're most likely going to be in that house for 2 or 3 years, or you probably wouldn't be buying a home. The average person has their mortgage there's a new study out, between 6 and 10 years. So if we can have where your break-even point is below, let's say 4 years, it might be a no-brainer. So we're going to start asking you guys and maybe quoting you with a point to see if we can drive down that rate even further, but not cost you too much money that it's nuts. So how do you get a hold of us? Basically, the easiest way, the first thing I ask you to do is please check out our YouTube channel. And what I'd ask you to do is give us a thumbs up, subscribe down below, and hit the bell every time we post a video. You get an alert. There's over 900 videos here. There's got to be something there that you'd like that interests you or can be educational to you. And if there's not, leave me a comment down below. I'd love to do that video. I also started a Patreon page, and I'm going to put these videos on there as well. And I'm going to have more in-detailed videos there because I don't want to bore everybody on YouTube. The ones that don't really, I have a lot of people follow me. They're realtors, they're attorneys, they're mortgage people, and they're saying, Dan, this is great video content. I'm studying for my real estate license, and you've been a great help. So I thank you guys for that. But to reach out to us for to how do you get your personalized quote, how do you ask us questions? How do you get an exit strategy for your forbearance program? Click here. and get the ball started. What we'll do here is you'll complete your application. You can do it, I suggest you do this on your mobile phone and or your desktop, but mobile phone is really awesome. And you can also set it up where you get alerts on every step of the way through the mortgage process. You can buy a house or refinance and start the application right there and then. But if you want to call us, scroll down, there's an 800 number, 844-775-LOAN. That's a good way to do it. What most people are doing right now, they're setting up a calendar event that you'll do a one-on-one consultation with us. And we'll do it by Zoom, phone call, or Skype. And we're going to walk you through and answer every question you have and go over the what, why, where, and when, and how on what can you do as an exit strategy, or what's your best options when it comes to buying a house, what's your best options when it comes to building a house. You can click a 15, 30, or 60-minute consultation. It'll click through. It'll open up all the dates and times available. You can click in there, pick the date and the time available, click it, you'll get a notification, I'll get a notification, and we'll make sure that we meet at that day and time that you specified. And that is it for today. I'll let you guys go. Happy Monday. Thanks for watching, and please don't forget to give us a thumbs up, subscribe down below, hit the bell so every time we post a video you get an alert. God bless, guys. I'll see you tomorrow. Bye-bye.